Live, and good morning to everybody. We are live. Welcome to Behind the Markets, the Wednesday edition. It is Wealth Wednesday, and a good morning to you, Vernon. How are you doing, bro?
Good morning. Thank you. We're good. How are you doing today?
I'm good, my brother. I'm always good, always good. Trying to make sure that everybody is ahead of what's happening on the markets. There's a lot of big news today, so let's get running so that we can get through the first part, which is the market data and the market roundup. So, good morning to everybody on Wealth Wednesday. It is Beyond the Markets. Let's kick off on our market roundup. First thing we saw yesterday was a record move on the Kwacha, the biggest gain on the Kwacha yesterday alone since November 2015. We are looking at over 7 years, almost 7.5 years, and we have not seen a single day move that big on our currency, mainly on news that's coming out, mainly on suspicions that there will be a deal coming soon, especially at the finance summit. So it does seem as though there are flows entering the market. That was some of the news that we were capturing yesterday. But we are seeing whether that is going to transpire or continue. We're going to be catching to see if that's going to continue to flow. But we'll see it in our deep dive section when we go into that. But we have seen that has wiped out all the gains on the dollar, negative for the week, negative for the month, and even negative for the year. So you are seeing that the dollar is down even 1.9%, even on year to date. And you're seeing that it's wiped it all into negative selling. This is why I keep telling people it is dangerous holding currencies because you're actually working against your government and against their policies. Meaning, once they get it right, you're on the losing side of things. And I'm not in the business of trying to take on the government. That's it's not a fight I'm into right now. Stock market stayed exactly where it was, 8,235, still stuck there, 12.23% year to date. Well, the bond market was up 0.6%, and in dollars up 11.84%, mainly due to the revaluation of the kwacha itself, and you saw it reflect in the USD bond index. Interest rates stayed the same, so that means it's just people buying up the exact same bonds. As we know, they're not buying them at lower interest rates yet. They're trying to capture the highest yields that they can on the market. Now, we also did see yesterday, we did see that, as you said, we did see that nosedive that took place on the FX market. Take a look at it there. Read them and weep, people, 17.75, pretty much low as it was probably about 2 months ago. But like I said, that is the biggest dive that we've seen. We saw the Rand also jump straight down into negative, down 9.78% in one day, down 9.37% year to date, down 1.53% on the month. So this wipes out a lot of the inflation fears that are coming in from cross-border trading activity. But you can see that this has actually pushed down a lot of the rates. Now, whether this will sustain, remember people, we have to continue monitoring this. The only problem I ever have with our people whenever we see such news is we get excited, like we're watching a pinball machine, and then we're saying, "Oh, is it going to get to 10? Is it going to get to 5? No, people, it's probably going to stop somewhere around 15, as in it becomes detrimental to the export community when it goes beyond 15. But no one can say at this moment how far it's going to hold. We have looked at opening data on the remittance market. It's currently trading at 17.42 on the remittance market. That's where the dollar actually is. So it's a little bit lower, and it has opened up exactly at that area. So we're still seeing that it is holding low, but we're going to see, is it going to go into reversal? Is it going to go further? That's going to be the question for today. If it goes any further, then we might be seeing a trend, but we're going to have to see this for a couple of days. Suspicions are this has to also do with the bond auction coming up soon. Other news that we did see yesterday on the market, we did see that, as I said, bonds were up 0.6%. As we said, US dollar bonds, unfortunately, we just had a little error there, up 11.84% yesterday. That huge spike up that we've seen, USD bonds are higher than they've been in some time. They've busted through their all-time high. The bond index up 16.92%, in dollars up 12.72% in Kwacha. Interest rates still only went down by a meager 0.001%, pushing it still at 24.09%. So that's one of the things we're still seeing on the market. Interest rates are still up 0.45% on the year. So we haven't seen them coming in yet to push down prices, but it always starts with FX rate first, then bond interest rates, then eventually the money squeezes into the stock market. That's how it eventually works. But first, we're waiting to see. Now, this doesn't mean that you stop. And I'm going to give a few tips to people who are actually in the bond market, what this all means to you. Now, let's take a look also at the commodities market. We did see that copper stayed around 0.02% up, but oil went down by 1.38% due to weakness, still sustained weakness on the market, while gold was down 0.91% yesterday, only up 6.5% year to date. Oil is down 12.7% year to date, and copper is only up 2.03% year to date. In terms of cryptocurrency, due to the exchange rate, Bitcoin down 7.6% in Kwacha, Ethereum down 8.7% in Kwacha, and gold down 9.6% in Kwacha. So year to date, we've now seen Bitcoin down to 58.15% year to date, and on the month down 6.5%. Ethereum down 11.2% on the month, and down 40.65%. So in other words, all this last quarter, you've just seen that the cryptocurrencies have actually now gone into the negatives, while gold also is only up in dollars, in Kwacha, 4.48%. As you can see on our broad asset mix, you can now see that the mainstream ones are the ones which are holding still. Stock market up to 12.2, bond 12.7, while the main ones are now shaving their year-to-date losses. Dollars are in negative, while gold in real terms is also in negative. Bitcoin and Ethereum starting to drop down in terms of their year-to-date gains already. This comes and paints you the picture that we are starting to get back to, we're reflating back to the regular market, but this has to continue for it to proceed. Now, on the oil market, on the expectations for oil, we're still seeing a bump up of about 0.95%, because on average the Kwacha is still up 4.94%, but just today we have seen it shave off about 8%. So we're going to see what effect this will have going forward, or probably we don't see a price movement. So if we see the Kwacha continue to rally, you'll probably see oil stay still, and then for the next month, probably that's when they'll start to move it back downwards, unless there have been any structural changes. But for now, we're probably seeing a slight movement of 1 Kwacha or 0, somewhere between 0 to 1 Kwacha. That is what we're seeing upwards. That's what we're seeing in terms of oil prices, or for the pump prices at the end of the month. Now, in terms of the four horsemen, we did see that German PPIs were dropped to 1%, a 28-month low. So we're seeing that developed country supply chains are deflating. Korean PPIs also declined 0.3% month on month, and down 0.6% year on year. So we're seeing these are developed nations that are now having supply chain, the regularization of their supply chains is actually pushing the prices to a more stable point. 3-month auctions for 3-month bills in the US were lowered to 5.13%, and for 6 months were down to 5.17%. Now that's still too elevated for capital to easily fly into Zambia. We are getting a bit of capital flying in right now, but for mass capital to continuously flow into Zambia, these 5% interest rates are still too high. While we did see UK gilts did auction higher as well, 4.93%, on the basis that the UK is expected to raise interest rates by 0.5% today, while German 2-year Schrats also auctioned higher at 3.15%. Now, in terms of industrial data, we did see the US housing market, because we did see mortgage data was stronger last week. Now we've seen the US housing market showed that building permits were up 5.2%, and housing starts were up 21.7% for both the month of May, month on month. So that was good data. Japanese industrial production was also up 0.7%, but unfortunately, EU construction output dropped by 0.44% on the month. So this is the data that's showing that industrial, we're seeing a housing market starting to slightly pick back up. Inflation is still cooling off, while interest rates are still elevated, but we're not seeing them come off their highs yet. So they're not rising too fast, but they're still elevated. So weak growth and a financial sector which looks like it's starting to stabilize, with interest rates still inching a little bit higher. Commodity sector obviously is still weak from Chinese data. We'll go through that later. And we've got the big news of the day. The Kwacha jumped by the highest it's ever jumped in since the 27th of November 2015. The Kwacha appreciated in the highest in one day since the 27th of November 2015. So we'll be catching people on the other side of the break to discuss what all of this stuff means as we break it down, and also to everyone to see what else is happening in the market before we get to our topic of discussion. Brendan, back to you.
All that shortly.
And a
Thank you for
good
still joining
morning.
us.
And a good morning. Welcome back. Welcome back. Thank you very much, Vernon, for having me back. And yes, biggest news of the day has been the Kwacha revaluation, which we saw yesterday. That was the biggest move that we've seen. And I put that in the comments to everybody who's there. Tell us what your thoughts are. Zambian Kwacha experiences the highest one-day appreciation since November 20. So since 27 November 2015, when it moved 11% on central bank intervention. So that was central bank intervention that pushed it back then, and we're not seeing it now. So we did speak around the market to see whether it was still the central bank moving in and muscling in on the market. So signs are that the central bank did actually back out of the market recently already. So we're actually trying to check whether now it's them continuing, but we are seeing signs of people starting to now think about what's happening in terms of a potential deal. So main news story that's come out: Kwacha experiences highest one-day jump since November 2015 on news that a debt bailout plan is expected this week. And the Zambian Kwacha appreciated 8.78% as offshore investors seemingly rushed to grab high-yield bonds on news that there's an expected debt treatment deal at the new Global Finance Summit to be held in Paris, June 2022. In other words, tomorrow and Friday. So that's the big conversation today, is that there is the Paris Summit, the new global finance, and we'll go through what some of that means. But basically, what is actually happening in the market is that there are some sources who are close to the issue did report through Reuters that there are expectations of a deal to be done here, that on the technical basis, the hurdles have finally been reached. Now there is just an offer being presented to Zambia, and then it is just about finishing that off. So if that means that we finally gotten through this, and I think obviously the press briefings that we've also been seeing with Chinese ambassadors, visits that we've been seeing with our president at the Chinese, means that I think we're starting to get a little middle ground point here when it comes to debt management and debt treatment. So I think we all have to pay a very close attention to what this means going forward. Now, what does this mean for the bond investor? So the first step that you actually have to see is that the offshore investor still has an appetite for high interest rates. So I don't see them pushing interest rates down yet. And they still a hawkish Federal Reserve with the Bank of England that's still raising interest rates, and an EU bank and an ECB that's also raising interest rates. So with rate hiking cycles still present in the EU, rate hiking cycle still present in the US, and rate hiking cycle still present. Well, they have paused in America, but they're looking to hike going forward. And in the UK today, we'll probably see a rate hike as well. With rate hikes coming down the barrel for as many of them as possible, I think what we need to pay attention to is that they're not coming in with low interest rate expectations like back in 2008 when back in 2005 when interest rates were really low, and you saw them come into our market and push interest rates really, really low very quickly. The last time we got debt treatment. So one of the battles we're still fighting out there is that central banks have elevated interest rates around the world. So they are coming in with a higher appetite for interest rates. Now, we also are seeing that obviously they're coming in just to also regularize. Now, the other thing I will say about offshore investors, they do have an appetite for high yield emerging market bonds. So I think we all have to pay attention to what's happening there. There is an appetite for that. So that is why you're seeing that single movement happening in our FX rate. Now, one of the things that did help the last time when we saw our FX rate rally very strong was that about $200 million came across in one single quarter for bond auction activity, because it was offshore investors on the premise that the president would have cut a debt deal by the end of 2021. So that was the optimism that they came in with. Now that they've seen that these things have progressed, that I guess that is the conversation. And this also falls in line with the fact that President Macron made the promise that this will be sorted out. Not the promise, but he did throw it out in the air that this whole debt situation will be sorted out by the Paris summit. The last time he spoke to President Hichilema, we did see that the representative for the IMF at the Bloomberg New Economy Africa Gateway Summit also state that we're on the verge of a deal with Zambia. So he actually did point that out. And now we've also gotten this third piece of news. So we've gotten these three title piece of news that's actually coming out so far. Now, obviously, everybody's watching this tentatively, so we have to also see, is the FX rate going to continue? We have to also see, is this going to start reflecting in lower interest rates in the secondary market? That's the other point. that everyone has to see. So now what do you do as a bond investor? Well, the first thing is I have been saying the words pile in before these guys march in. Now, right now, they're not marching in with high interest, with very low interest rate expectations because they're not dealing with negative rates in their country. So you still are going to be playing around with a little bit of high interest rates for now. It's the exchange rate that's going to be the first thing that gets impacted before the interest rates do. But that doesn't mean you take it for granted. The other thing I'll tell you is that with NAPSA still out of the picture, because they're still handling liquidations from people's payments, from the payments, that means that the 10-year and the 15-year space is all open for offshore investors to start playing around in that space. So you will probably find a lot of them are going to gun after those ones because they're going after the high interest rates. Remember, they're not dealing with high inflation in their countries. Their biggest worry whenever investing in Zambia is forex risk. But if the FX rate stays still, they go for the 10-year bonds and the 15-year bonds because they get their money out pretty quickly when they get the coupons. So when they get their coupons, they get their principal capital out pretty quickly, and everything else is profit from that point onwards. So that is one of the reasons why they're going to be playing that market pretty quickly. So I think everybody has to pay attention to the way they're going to be doing this. But there's going to be a lot of signals put in this auction. And should a deal be done by this week, as per the news cycle? Should we start to get news of the deal and the announcement coming out? Now, why is everybody in a fracas? Because basically, there's going to be discussions about debt. The Chinese representatives are going to be there, and we're also going to get quite a bit of activity coming in, and we're also going to get the main representatives of the creditor committee there as well. So it would create the perfect grounds. Now, everybody is paying attention to what is going to happen to Zambia, because that then signals what's going to happen to Ghana. That signals what's going to happen to Ethiopia. That signals what's going to happen to every other country that's on the doors of the IMF trying to get a deal. And they're looking at countries like Sri Lanka and Pakistan as well, who are trying to get full debt treatment as well. So I think everybody is really holding with bated breath because Zambia was the common framework signatory. We were the test case that got China onto the common framework that started this whole process. And it is the test case. So it's not just Zambia's name that's on the line here. It's the IMF's name that's on the line. It's the World Bank's name that's on the line. It's various parties that are on the line that are driving this more than just our country alone. So I think everybody's going to have Hawkeyes at the next summit that's happening. The summit that's happening in the next 2 days, watching for any strong announcements. And this bond auction is going to signal what's happening. And also, they're going to have their eyes on what's also happening with Federal Reserve Chair Powell to see if he's going to be talking about higher interest rates in America or if they've now just put themselves on an indefinite pause. So yes, to some people who are joining us today, they are seeing that, and these are sites, Lamek, that is correct. Good morning. With foreign investors rushing into our bond markets, should we let banks bid on our behalf, or do we deal directly with BOZ to avoid being left out of the auction altogether? As long as you get and I always tell everybody this, as long as you get your letter of guarantee in, and yeah, this does become dodgy ground for our friends, because I always say this: if you're not going direct, the biggest bidder's bid always goes through, because it often has commissions. People just remember, these are businesses, okay? They serve their biggest clients first. So yes, that is a good question. I would say in times like this, I would advise as many people to do direct bidding, okay? One, your guys in the backs of your banks are probably dealing with a lot of paperwork from their offshore clients. And whenever that happens, I see a lot of retail investors get their bids not go through. It becomes a sad story. And then they start saying, oh, no, it was a mistake. I would advise you to be very vigilant during this period, very vigilant about your letter of guarantee, and very vigilant about doing the bids yourself. Okay? That is one thing I would advise you to do right now, especially whenever there's this much activity happening. It is very easy for your paperwork not to make it. And I know people who say, no, I'm being honest. This is a thing that we've seen quite a bit. So if you are a bond investor prepping yourself for the next auction, please make sure that you are hyper vigilant. Be on your bank's case. Make sure you notify them and tell them, hey, where's my letter of guarantee, and get your bid to POC yourself just to make sure. Because like I said, in the financial markets, people, biggest goes first. It's not the Bible where it says the least shall be the first. In the financial markets, the most is the first. They get treated properly, right? So let's move on. That was a very good question. Thank you very much for everybody who's paying attention. Let's also see what's happening in the other part of the news, which we are expecting here. Sorry, before we actually get there, I do need to give everyone that what this actually means going forward. Now, if you are a bond investor, how does this affect your strategy? Now, how it affects strategy is that the first thing is that our interest rates on our bonds are currently trading at about 6 to 7% above inflation, especially if you're trading at about 3-year bonds. You're currently trading somewhere about 7%. Because inflation is about 9 to 10% right now. Those things are giving a return on investment of about 18.6. So on average, we're seeing somewhere 18.3, 18.6. So the 3 to 5 years giving you the 8% return on investment, while the 2-year is giving you somewhere around 6%. So what I would advise, what everybody should be playing around with in their minds now, is that they need to start, if we do see a push down of interest rates coming down, now it's time to start getting ready to rotate capital, because here's what happens when you do get a continuous flow. So we want to know if this is just an instantaneous spike or if it's a continuous flow of capital into our bond markets. Okay, so those are two different things. An instant spike means that we'll have one or two very good ones, just like we had in September last year. And then from that point, we had very poorly subscribed ones, or we will have very good ones going forward. Now, what that means is if interest rates start to come down on the bond market, then banks start moving capital out of bonds. Because what the banks are going to first try and do, here's the first step they're going to do, is they're going to sell off their historic supply of bonds, their 15-year and 10-year historic supply, the ones that were issued out to suppliers who then traded those in for cash when there was that mega bailout that happened at the end of 2020 going into 2021. That huge bond supply, about 70 billion kwacha worth of bonds that were issued out between 2020 and 2021, the banks have to offload that inventory first. So their first game is to sell those secondary market ones, which had very high yields, the 30s, the 40, those ones that were in the mid 30%. They're going to frontline sell those ones to their clients to then free up capital. That's the way the banks are going to play this first. They're not going to just open the gate so that these people get into the auction. What they're going to do is sell down their bond positions first to free up a lot more capital, because then they're going to have the option to put some in the auctions and then put some in the lending markets. Because lower auctions, because that's what's going to do, it's going to be the secondary market that's going to be the leading indicator to the primary market. So I'm not seeing any movement on the secondary market yet to signal that bond interest rates are coming down. It is the secondary market that signals the primary market. So keep your eyes on the secondary market. The numbers that I keep giving you here, it's still at 24.09% on the S&P index for the secondary market. We are not seeing movements down yet. So those are going to be the signal, because the banks are going to sell those ones, and they're going to sell those ones at higher rate, at lower yields first, to try and get themselves a profit. That is going to be the signal when the primary market is going to get rushed into. So I think for now, we're still seeing higher interest rates playing out on the market for now, especially in the coming auctions. So prep yourself for that. But if you do see a flow over the next 2 to 3 auctions, then it's telling you the stock market is opening up. Okay? Why that's the signal is this. Once you start to get lower yields, banks go into big corporates then. After that, banks go into playing the big corporates market. And the big corporates market are your listed companies. If your listed companies are getting capital at lower rates, it means they're going to do expansionary activity at lower interest rates. And that's going to help them. And at the same time, if you do get that flow of capital, this is a big if you do get that flow of capital, you get the exchange rate coming down, meaning input costs to certain companies, your Zambeefs, your Zambia Sugars, those ones, input costs start coming down. So margins start to rise because of lower financing costs and lower costs of production. Those are the two things that bump up margins, and it creates that push for the stock market to then start driving up. So start looking at the rotation. If you start to see the interest rates, start looking at the rotation. The first step, I think, to rotate to look at is dividend stocks. That's what everybody has to pay attention to. It's the dividend-paying stocks and the growth ones. Those are the main ones. So really, your value play is what you're really looking at first. Okay, but then there's also other parts of your effort of your high yield market, whether it's your high yield unit trust, or whether it's your even things that are a little bit more risky, such as P2P. Those things start playing a bit high, but please play those with caution. Whether it's P2P, whether it's village banks, play those things with caution. Because when you put too much of your portfolio into there, if anything goes wrong structurally, it ends up wiping you out very quickly. Remember that you're playing in high risk areas. So just also remember that we're now starting to open up into more risk of the market. This is just news for now. Okay, that's what to expect should tomorrow or the day after materialize the positive signals that the market is projecting. So the market is projecting the positive signals. We haven't seen them materialize. But should the market materialize, remember what I always say, a bond rally precedes a stock market rally. That's the news that you probably have to look at. So we haven't had a bond rally yet. We've just had a flight of money into our FX market, which then signals that there is to be a bond rally. It has not started. It's a signal. So we're waiting for the signal to convert into a start. Once that signal of the bond rally converts into a start, it then starts signaling the precursor for a stock market rally. So a lot of it is playing in the ranks. So there's quite a little bit flowing through the market. But remember, this is all still speculative. We're still waiting for the next 2 days to play out. So there's going to be a lot of news playing this out. But it is eerily timed for the auction. It is very well timed for the bond auction that's coming up soon. So it does look as though there's probably a bit of buying first, but banks will frontline try and get these offshore investors to buy their stock before they go into them. I hope I've made that very clear to everyone before we move on. Right. So let's move into let's also move into what's happening, especially at this same the same summit. President Chilema is scheduled to participate in the New Finance Pact Summit in Paris, which is convened to consider viable financing mechanisms that will guarantee countries access to international markets and concessional financing. Now, what is to be covered at this? The main key issues there are multilateral development reforms. They're looking at the operations of multilateral development banks such as the World Bank, institutions like the IMF, Africa Development Bank. How are they going to be operating? How are they going to be dealing with sovereign debt? That's going to be the main issue, health and climate financing as well. We're also going to be looking at IMF drawing rights. This is a big issue. A lot of African countries have actually been pushing for developed countries to actually surrender some of their drawing rights to developing countries, because they're saying we need those drawing rights more than you. You can get money from your capital markets at very cheap prices. So what's the use of IMF drawing rights being to you? Now, European countries have actually agreed to do this, but there have been some legal hurdles behind it. So they want to discuss how to actually work around this and get EU countries to now reallocate some of their IMF drawing rights, special drawing rights, to developing countries, meaning countries will be able to access more capital from their IMF drawing rights. Countries like Zambia, and that'll give our reserves a lot more strength. So that's something we should be looking at as well. At the same time, we are seeing that they're also going to be talking about taxes for climate finance, including things like international airline ticket taxes. So watch out for travel and tourism that might be affected there, and maritime taxes. In other words, anything to do with imports. So cost of imports could actually be affected in the future. Now, these are not instant things. These are things that are being talked about and worked on. But international travel taxes and maritime taxes, one will affect travel and tourism coming into countries like Zambia, but will also affect imports coming into our country as well. So they're going to be discussing that as well. Now, the big issue they're going to be discussing is global debt, the issues of the rise of global debt and the debt crisis in the global south. So countries like Zambia, we're the lead case, we're the lead one that they're trying to deal with. But rising debt is one of the main things they're going to be discussing, how to do economic adjustments and debt restructuring measures. So in other words, they're trying to figure out, look, China is now a big creditor on the market. So China is expected to be at that summit to also now deal with the conversations of how to deal with debt restructuring as well. The Development Lab is also going to release the Finance Development Lab is also going to release its public debt decomposition tool, as well as putting debt standstill in the event of climate-related disasters, and also viable sustainability-linked debt. Now, remember, Zambia is also trying to open up a green bonds market. We're trying to get as much climate finance so that we can get much lower interest rates on public projects. So that's one of the things we're also trying to drive at here. So this is going to deal with our debt issues, also dealing with viability of sustainability linked debt, and also in the event of disasters such as the pandemic, how do we put a standstill on debt and how do we treat that globally? Those are big things that are expected to be talked about there. There are papers that have already been floated out. This is about trying to reorganize the financial system from the main countries that do the lending. Your G7 nations have been the main lenders in this world, but now they've got China, who they've been trying to put. They got into their Paris Club and they're trying to say, now, how do we form you? Because you are the one who they owe the most money to. So that's one of the big stories. And the other thing also that they're going to be discussing is public goods finances, things like health financing, global health financing, dealing with the crises that we've dealt with, links between rising debt and health spending. So how do we deal with health spending in a time of rising debt? Look at how Zambia has struggled, especially over the last, just even pre-pandemic, how our debt levels were actually eating into our health budget for our nation. International financing in biodiversity in the South. So remember, they're also now looking for how to also manage biodiversity and also making sure that we're not growing at the expense of our animals, and also including biodiversity in IMF policies. So how the IMF should also target to protect biodiversity in any country, especially those where they're getting deals to. So these are things that you'll see as conditions. So they'll start to look and start saying, now, how do we try to make sure that we protect and conserve the parks of Zambia? How do we protect the animals of Zambia during this period? Other news that did come in yesterday is the EU has increased its bilateral allocation to Zambia by $110 million for the period 2021 to 2024, $60 million in budget support to health and education, $30 million in Kariba Dam rehabilitation under the promotion of renewable energy in Zambia, and $20 million to smallholder farmer resilience programs to try and help them mitigate food security issues and cost issues of management. Now, other big news that happened in the market yesterday is crude oil is still lower as China rate cut fails to lift sentiments. Now, hawkish Federal Reserve Chair Powell is also expected to speak at Capitol Hill today for a two-day congressional meeting, and they're going to be looking for signals of a July rate hike for 2023. So this is what we should also be paying attention to. If we're going to see the Federal Reserve resume rate hiking in July 2023, then that's going to signal to us that the offshore investors, though they may come, are still not going to push interest rates down. Just like we saw in September, they came in rushing, but they didn't push interest rates down. The reason that happened was because they are still dealing with elevated rates in their country, and they're also allocating risk premiums to us. So it's all about trying to also manage the next steps. So I think everybody has to also understand the first steps we have to start seeing is cost of capital in their country also has to come down. And secondly, our debt has to get reprofiled. So in as much as you can reach a deal here, you then have to reach it with the private creditors. Then the final step is then fixing your rating. Okay. But obviously the big barrier has been this point. So everyone is assuming that once we can get past this point, then the rest becomes automated. So this is why your bigger banks who have a lot of capital sitting around ready to release firepower, and they have been doing that in bond auctions happening in countries like Mexico, Indonesia, Saudi Arabia. These have been record sovereign bond auctions happening in these other countries because there's a lot of ammunition sitting in the hands of the offshore banks, the international banks, your JP Morgans, your Goldmans. They're holding a lot of capital right now, ready to release international firepower back into the market. So this is one thing we'll be paying attention to. But also on the crude market, we'll also be seeing that Iran's crude exports and oil outputs have actually hit a new high in 2023 despite US sanctions, while Russia's crude oil flows have actually drifted a little bit lower. So the expectation was that was supposed to push up prices, but unfortunately Iran getting back on the market and talks of an Iran deal are actually also putting pressure downwards on oil prices. So all of this will actually converge together to probably support a little bit of stronger economic growth for the year 2023. 2023. Should it all materialize? Remember, the big question is, should it all materialize? So that's all the big news that's actually happening on the market for everybody. I know that's been what was the big thing. Kwacha has moved up by 8.7%. record levels. Before we get into our conversation of the day, Vernon, I hope you've actually captured it before we get into the figure it out portion, and also today's conversation on asset allocations. You don't want to miss this part. I'm going to give you my 4 C's on selecting the right asset. Okay, so all of you who are trying to look at how to invest your money, a lot of you have been getting swindled. I'm going to give you some swindling statistics and the 4 C's on selecting the right asset. Vernon, let me hand it over to you before we get into our topic of discussion. Any thoughts on our record movement of our currency and the potential of a debt deal? What are your thoughts? Okay, I think Vernon has frozen out, and actually, I know he's back. There we go. Vernon, yeah, there you are. Your volume is gone, Vernon. There's no sound coming out from you. Sorry about that. Okay, so as Vernon works things out, let's just quickly rush to still nothing. Let's quickly rush into our next topic of discussion today. And I'll figure it out. Here's the number of the day: 75%. 75% of Zambians surveyed reported being the target of email and online phone calls and text message fraud. 75%. Please comment down there in our section here. Have you been approached in the last 3 to 6 months? Have you seen any WhatsApp message, email, phone call, or text fraud where somebody is offering you an investment offer that looks too good to be true? Primarily, what Zambians are being targeted on is something called smishing, which is social media engineered attacks that use fake text messages to trick people into downloading malware or sharing sensitive data or sending money to cyber criminals. So in the comment section, quickly comment, have you received any message, be it in a WhatsApp group, personally, anything, where somebody's making you an offer for you to make an investment and send them money from nowhere, or download this and that? Please give us your thoughts and your behavior. So it's 75% of Zambians surveyed by the TransUnion 2023 State of Omnichannel Fraud Report have actually cited that they are receiving scam messages. Apparently, this also comes according to the Zicta Zambia Computer Incidents Report team found that there are 10 million since as of 2021. They received 10.71 million cyber threats in the form of mobile money reversal scams, social media account hackings, fake online products, and investment schemes. So these are actual things that we've seen. This is in Zambia alone. 10.7 million people have been targeted for mobile money reversal scams, social media account hijacking, fake online products, and investment schemes. Also, give us a headline. Have you also experienced some of these as well? So in this time where there is so much scamming going on, Vernon, in fact, quick question. Have you been the victim or have you been the recipient of some of these recently? Sorry, Vernon, we still don't have you with us. I don't know what's going on with your volume, but unfortunately, we've got Vernon lost for today. But yes, 10 million Zambians have been the victims. There have been 10 million incidences, not 10 million Zambians. There have been 10 million incidences. So, as we're saying to everybody in the comment section, give us your thoughts. Have you been the victim, or have you been the recipient of a scammy message where somebody's telling you, give us 100, we'll give you 10,000 by the end of 12 hours. Ask me how, as Joey Mukando would say. Our chart of the day actually does show the breakdown of these 10 million cyber threats that we've seen. This is actually figures from Zicta as well, which have actually shown how much money has been lost in some of these general public figures getting their social media accounts impersonated. 3.7 million incidences, 3.7 million kwacha has been scammed out of people since 2020 second quarter all the way up to 2022 second quarter. So 2 years. 3.7 million has been scammed out of people by false social media accounts. Pyramid schemes have stolen 6 million kwacha, 1 million kwacha in SMS fraud, and illegal access to corporate and individual bank accounts and transfer of funds. 150 50 million kwacha has actually been stolen over the last, has actually been put at risk or stolen over the last 2 years. And also impersonation of VVIPs on social media platforms have also taken over 150,000 kwacha over the last years. So these are where the target soft spots, and you can see a lot of it is happening with social media and accounts access. So giving people access to your accounts, putting out things out there. This data shows you how dangerous the internet has become as a place, and we all have to pay very strong attention. So today I want to give you what I call the 4 C's of asset filtration. So what I call the 4 C's of asset selection to help you. So the key thing first I want to tell all of you is that the key to building wealth is letting other people use your money. Whenever you're investing in a government bond, you're letting the government use your money. Whenever you're investing in a stock, you're in effect or indirectly letting that listed company utilize your money. Whenever you're lending money to someone, you're letting someone use your money. When you've built a house and you've let someone stay in it, you're letting someone use your money. So the key is the key about savings and investing is about letting other people use your money and finding the right safe market to do that. Now, one of the reasons why we utilize markets, and I want everyone to pay attention to this, we use markets for risk management. Okay, you invest on the stock market as opposed to directly going into private business because there's a lot more risk in the private one as opposed to publicly traded companies where their financials have been vetted, where they've got boards that are convening, where there's open access, where they're monitored, where they're scanned, where everything is in the open. So you use markets. The reason why you use publicly traded markets is to make sure that you can manage your risk. You invest in corporate bonds as opposed to lending directly to companies because of that. So anything that is publicly tradable or highly regulated is for the purpose of you as the investor to manage your risk. So you really want to pay attention to the fact that you're doing this. Now, in exchange for letting other people use your money, you want them to pay it back, or you want them to grow the money for you, or you want them to pay you regular sums of cash periodically. Okay, so you're looking for growth premiums on your money or cash payouts. But how do you decide who can safely use your money? That's the big question. This is where you get scammed because you're always looking just at how at how much each person's offering you. You need to balance risk. What is the probability this person is not going to grow my money? In fact, they're going to lose my money. What's the probability they're going to default on the cash payment that they're offering me? What is the probability they're not going to make? They're not going to honor what they're offering. So that's what you need to look at, because along with how much they're offering, you need to look at what is the probability. So I'm going to give you some soft factors to look at whenever you're looking at it. And these are what I call the 4 C's of asset selection. I want this to be your asset filter, the filter that you see a decent investment in. If you ask these 4 C's and you make every investment offer given to you go through these 4 C's, your probability of being one of the people scammed. Now, remember, out of the 75% of Zambians who've been approached by scams, 12% are the ones which have fallen for the scams. So they're really getting about 1 in every 6 Zambians who they approach, which is pretty good numbers, by the way, for any sales team. So let's look at these 4 C's. The first C is character. Okay, and there are 3 simple things you need to look at when assessing character. The first one is authenticity, responsibility, and consistency. The first, consistency, there's going to be another one, but these are authenticity, responsibility, and consistency. And here are some questions to ask for each. Now, 1A, authentic. Are they who they say they are? Have you verified these people? Have you verified who you're giving money to? Okay. Are they speaking to you honestly and earnestly? Is this the way they speak, or are they putting on a facade? Are they faking it? Are you seeing signs they're faking this? And is there proof and identification by an independent authenticating party? Do they have a license from the Bank of Zambia? Do they have this? What do they have that's approving their ability to take your money? Okay. What license do they have that is authenticated by a third party who has gone in to check who they are? The second one you're looking for is, are they responsible? Okay, so if something goes wrong, have they shown that they can correct or remedy it? All right. So if anything goes wrong, if anything happens, have they proven that they can fix it? Have you seen them go through something bad and they've managed to recover back from it and say, sorry about that, we've managed to fix it? Whether it's a listed company, have you seen them go through a downward spiral where the economy hit them badly and they managed to remedy it and come up as well? Have you seen them go through tough times and return from it better? That is what you're looking for. Have you seen them mess up and fix it? Do they have the adequate things? One of the reasons companies like, for example, in the crypto space, and I know this might be something that's a bit dodgy, but in the crypto space, you find that companies like Binance are trusted simply because when Binance had a hacking incident, they actually had insurance for their clients and they paid them out. They paid out those whose accounts were hacked based on the insurance, and therefore that increased the trust to Binance. So it's not about has nothing ever gone wrong. Has something ever gone wrong for this company, and have they recovered from that thing? So that's one thing you want to try and see. How have they recovered? Did they have the adequate resources to fix it? Because everything is good until something goes wrong. So is there evidence of them being responsible and consistent? Are they consistent with their messaging? I've seen some of these scam messages where somebody says, give us 100 kwacha, we'll give you 200 in 12 hours. Then the next one says, give us 100, we'll give you 1,000 in 6 hours. I'm like, what's going on here? So that's one of the things you need to look at. The second one is what they're saying consistent with sound money principles? So be very careful about investing without any form of financial education, because then you don't understand how to measure what is realistic and what is sound money principles. I always tell people this 364-day treasury bill rate of about 16% now is what we call the risk-free rate. Anything above that is risky. Anything above 16% being given to you in terms of return on investment, that is a concession for the risk you are taking. So the higher that interest rate is, the more risk you are perceived to be taking. That's why your bonds are only giving you about 18%, because they're very tied to that risk-free rate. But now when you start getting into, we're going to be giving you 30, 40, 50, you are playing in areas where the probability of payments not being done or offers not being made, that probability starts rising higher and higher. So use your 364-day treasury bill as a measure of what risk you are taking. Okay, so that is always going to give you an idea of what risk you are facing, because that is always going to be your benchmark for zero risk, or at least lowest risk investment. So that is your first one, which is character. Are they authentic? Are they responsible? And are they consistent with sound money principles? The second part we're looking for is consistency. Now you're looking at, does this entity have an independently verifiable track record? So it's a company, do they have financials that have been audited? Do they have a third party that has looked in and authenticated their track record of delivering on their promises? So has a third party authenticated that this party is delivering on their promise? Some authority, some entity, have they had these numbers vetted? And also, have they delivered what they're promising for at least 3 years? Now, if they don't meet the consistency criteria, now if something doesn't meet these 4 C's, it doesn't mean you cannot try to invest in it, though I wouldn't recommend it if you're a first-time investor. It means go in a minimal fashion. Do not start putting the majority of your wealth in there because they're going to be offering you big numbers. Put in only small amounts. Have limits to how much experimental capital you can deploy out there. Above the 15% that I always tell people, 15% of your money can sit in Forex. 15 in a combined fashion can sit in Forex, gold, and crypto. You can take an extra 5% to keep 80% of your portfolio in mainstream assets, being bonds, benefits, your rental buildings, your main things. You can take an extra 5% into experimental investing. I only advise this for people who have got a balance sheet of above 1 million kwacha or more, because then you can significantly try out these things. Done work, you've lost 50,000 out of your million, you're not at the end of the rope. You know what went wrong, and you know you can walk away. So you can walk away without too much damage. So consistency is extremely important. Have they been delivering these gains for 3 to 5 years? Why do I give this number? For a company to be listed on Lusa, they have to have registered profits for about 3 to 5 years before they can register on the stock market, or before they can register the security as tradable. So that's the standard for Zambia. We need to see your track record for 3 to 5 years. Third one is credibility. Have they given you a detailed explanation of the process by which they plan to grow, to grow or cash compensate your money using deep, sound technical knowledge? Okay, do they have the capacity to actually improve your money? Now, I saw people on that. Remember that when Kamono got taken down, you did start to see that one of the first things the DEC did say is the farm did not have the capacity to meet the returns that they were offering. These are the issues that ended up happening. So, have you independently verified the story that they're giving you of how they're going to multiply your money? Don't just listen to the multiplication. As Joey says in his famous skit, ask me how. Okay, literally, people, please ask them how. Somebody write that down in the comment section. Ask me how should actually be a problem, and it should make sense. And does this explanation make logical sense to you so much that you are confident enough to explain this to somebody? Do you feel confident being able to explain it to somebody and that person will understand? Not they'll give you the look as well. So if you're not confident, be very careful about allocating too much. So this is why I say the same thing even with bonds. I say, look, if you're not confident yet, start small and ease yourself in. Get to the point where you start to see this. Experience a coupon payment. Experience a maturity. See how this thing works, and then look at the budget. Follow it. But yes, learn to ask them how. So every time, ask them how it is they're planning on multiplying your money and what technical knowledge, and do they have the credentials, the capacity, the experience, the track record to show that they're capable of multiplying money in that way. So, and finally, credentials. What certifications or independent verifications do they have with trusted institutions to prove their capabilities to deliver on their promise? Okay, cash payments or premiums. Do they have an entity that can authenticate their capabilities to do this? Because if you've got a license with, let's say, pensions and insurance, you usually have to go through capital adequacy checks to run a unit trust. They are requirements that the Securities and Exchange Commission will place on you to be a listed company. They are minimum requirements. So there are minimum requirements that are placed on these companies. So if you have independent authorities that have given them credentials, it's often the best way to verify it. And finally, so to look through the 4 C's, and someone write this down: character, consistency, credibility, credentials. These are extremely important before making an investment decision. Now, just to give you a quick look at all of this, my view of Zambians who have 2 million in net wealth or more usually keep their money in buildings, bonds, benefits, and businesses, be it public or private. And here's a map to show you there's 64 billion kwacha worth of money sitting in NAPSA. People, that is investor money. That's private individual investor money. So I usually do people's NAPSA accounts and look at their NAPSA. I calculate what their balance is, put that on their balance sheet. Benefits from their employer. If they've got an employer who's giving them gratuities and giving them pensions, you often find they've got a large sum of wealth sitting in there. 141,000 Zambians with approximately an average of 90,000 kwacha sitting in their benefits account as well. Government bonds. Individual Zambians, I've got 3.2 billion kwacha sitting in government bonds, and equities and unit trusts, somewhere between 3.2 to 3.7 billion kwacha is sitting in the hands, in the representative of retail investors, is sitting in unit trust. So you can see a lot of the legitimate wealth that has been built by people. Now, added to this is also their buildings. We just don't have a measure for that, but their rental buildings also make up quite a large chunk of their portfolio. So when you put all these together, you often find that people have actually built very strong portfolios, mainly off of this, and they've done it slowly. They did not do this overnight. So if you're trying to get somebody to multiply and make you a millionaire in a matter of months, you will be a victim. All these people have built these portfolios over 10 to 20 years. All of these people have built this wealth in buildings, benefits, bonds, and businesses. They've built them over 10 to 20 years. So lying to yourself that you're going to get that wealth in the next 2 to 3 years just from somebody telling you that you can do online farming, all sorts of things, that is where you get yourself hit. This is some data that I will share with you later, but this is the real wealth that has been dealt with the Zambia, and I'll go through that later. But just to kind of to slow it down, here's my final words of wisdom to kind of leave everyone. Dishonest money dwindles away, but whoever gathers money little by little makes it grow. Proverbs 13:11. And finally, the words of William Shakespeare from the book from his play The Merchant of Venice. All that glitters is not gold. So run things through the 4 C's. Okay, because all that glitters is not gold, people. To all of you, I hope you've managed to pick up on something here, and you're also prepping yourself for your next auction. We've lost Vernon for the day, but we'll see you tomorrow as we discuss enterprises on Enterprise Thursday. This is Behind the Markets, signing out.